Welcome to the 10 Mil Club Penny Stock Punch Card for the second week of April 2026. We're going to very briefly touch on FUBO after our video from previously in the week. We're going to talk about two stocks to toss, two we're going to look into further. So let's get to it.
From Nashville,
It's the 10 Mil Club. It's the 10 Mil Club.
Thanks for coming along. What is the 10 Mil Club? The 10 Mil Club is an informal group of people who believe that if we were able to get to $10 million worth of wealth, we'd be free from the cares of having to work for someone else and be told what to do. In short, if you are somebody who believes that that is the case, you are in the 10 Mil Club and we welcome you. As of yet, we don't have a whole lot of stuff we can hand out that says 10 Mil Club on it, but maybe one day we'll get there. As some disclaimers, I may or may not own any of the, well, anybody here at the 10 Mil Club may or may not own any of the securities that we own here, but we may, and we may not, and we may be looking into them. You have my word that I will do my best to give you my unbiased, unselfish opinion on them. If I can't do that, I probably just won't say anything at all. But our ownership of them could change at any point in time. Nothing in this video is financial advice. Do not go trade based solely on something we say in this video. Do your own due diligence. Securities we present here may or may not be suitable for you. You're going to have your own ability and willingness to bear risk. You're not us, and we are not you. And any valuations that you see in any of our videos do not comply with any of the standards or ethics of any of the valuation organizations and societies to which I actually am beholden because of who I am. So with that, let's get to it. First of all, we're going to touch on let's talk about the 10 Mil Club criteria. So here at the 10 Mil Club, we look through a lot of stocks, and especially a lot of penny stocks, because just like you, we are enthralled with the idea of taking something that doesn't cost a whole lot and turning it into something that is worth a whole lot more. It's part of human nature. But these are the criteria by which we live. If a stock has a downward price and nothing else, because we are essentially long only. We aren't too terribly sophisticated here in our positioning. We don't do a lot of shorting. We do very little option purchasing or selling, though we do a little bit of it. If we see just being long only like that, if it has only a downward trend, it's likely a no for us, unless we can just figure out some way to make money on it otherwise, which we don't do very often. If it has bad share dilution, it's almost certainly a no too. There is good share dilution, or at least acceptable share dilution, and we'll talk about that. If we cannot see a path to profitability, it's almost certainly a no, because most penny stocks are penny stocks because they aren't making a whole lot of money. If the management does not care about the stock or doesn't treat it very well, it's almost certainly a no, and we do not buy directly into short squeezes that are already in progress, because that will get us killed. So with that, we are going to move on. Earlier this week, we put out a
10 Mil Club
video on FUBO, and two people gave me some comments following that video that I'd really kind of like to touch on here. Those people, one of them was on a subreddit, and that person goes by the handle Corinne Imluate, and the other person was put the comment directly on the comments of our follow-up video for FUBO. Someone named Anthony Erickson, I believe. Both of you, let me say, thank you for the thoughts. You gave me the greatest gift, which is something to think about this week. But the way you presented those comments was very professional. It was very caring. it was not combative. And I just wanted to say that's the kind of thing that we really value here at the 10 Mil Club. And so thank you. Keep that kind of stuff coming, because I don't know everything. I'm wrong quite a lot. But it just really, the way you presented those comments spoke very highly of your character. And I just, not knowing you, that was my take. So, okay, the comments were that FUBO's management is probably in a blackout period and cannot buy the shares. I criticized them for not buying the shares, for complaining about the shares being as low in price as they are, and they made comments about them being undervalued and that sort of thing, or not reflecting their operational improvement, things like that. I'm paraphrasing badly, but the amount of time I spent on this, that, if you want to pause the video and go through the excruciating process of putting that URL into, I don't think you can copy it directly off the video, but put it into your browser. I did go and read their policy on insider trading. The upshot of it is this: there are quarterly blackout periods which are intended to prevent insider trading around earnings, and there are special blackout periods. It's that second one that's really the issue. Special blackout periods are not announced to the public, and in fact management is not allowed to tell you when they're in a special blackout period. I didn't even contact shareholder relations with FUBO to find out if they were in a special blackout period or what they had been recently, because it specifically says in the policy that they cannot tell us when they're in special blackout periods. So my adding it up, there could have been points where they may have had a few days. I don't know. Let's just go ahead and call it and say that you are right, and they've been in a special blackout period or some sort of blackout period pretty much all the way from late last year until now. So totally a possibility. Let's just go with it. I'm with it. The share buyback plan, one of the suggestions that was made was that it's actually dangerous advice to suggest that they have a share buyback plan with no intention to use it. Fair comment. Well taken. And part of the continuation of that thought was that the share buyback plan would actually be a bad idea, because with them working toward those EBITDA goals, they really need to hit those goals and not be spending the company's money buying back shares. Good point as well. I would like to see a share buyback plan, even if it was for a small number of shares. I would like to see that. Even if just for a small amount of shares, it would tell me that they were conscious of the share count. Anyway, so excellent points. Again, thank you so much for the professional tone and the way that you posted that. You can post that way on the 10 Mil Club channel anytime you'd like to, and we will give you a shout out, and would love to hear from either or both of you again. And before we go, FUBO has yet to cross this downtrend line. It just, admittedly, I like to call this area up here and this area up here and everything up to the reverse split fake numbers, because the stock price really honestly never was that price until just recently. But FUBO did this whole technical movement, which is the only way I can really describe it to myself in my head, is that technical movement, and then began respecting that line again. And I just, while I'm interested in the company because of Disney's involvement in it and the fact that we've spent so much time on it, and I do think that at some price there will be value there and upward momentum for me as a potential shareholder, as of yet I have not bought it. So good on us for sticking with it, though. And let's move on. So we're going to talk about Data Vault. This stock has been shilled endlessly on Facebook pages, specifically Penny Stock Millionaires, where I spend way too much of my time, and others. We're going to talk about that one. it's a data sciences and media tech company. It uses AI. It got kind of caught up in the AI craze of last year, if you will. Here's Thinkorswim on it, showing us the trend. Let's go more than a year. Let's go more than 6 months. Let's go to a year here. This is a year of Data Vault. It just kind of putters along and even doesn't really putter along. And then all of a sudden the whole world gets excited about AI. And then the world kind of realizes that that might be an overpriced stock, and down it comes. And then we don't have an uptrend line to really tell us that we're going upward. So do we have a price trend? No, not right now. Do we have bad share dilution? All right. Here is Data Vault. They had a 1 for 50 reverse split in April 2024. There are a lot of numbers on this page. Don't get psyched out about them. The main point is this, if you want to look at them for just a second. There were only about a little over 4 million shares at the end of 2024, which was 152 million shares. That is a lot of share dilution over a single year, which means that even though the revenue increased significantly for the company, it's only about less than half of the revenue per share. And we kind of have to value the company. If we were going to value it, I'm not going to do it here, but if we were going to value these shares, we would have to do it based on revenue, because that's the only positive metric we really have. I mean, I guess gross profit we could do. But we also have a bigger total net loss than we do the previous year, despite the share dilution. To me, this is bad share dilution and nixes any further look into the stock. If you are somebody who really wants to tell us why we should look into Data Vault, and you can tell us some reason that I overlooked, let me know. But bear in mind, what the company does is one thing. How it affects the equity is associated, but often close to entirely another. So Data Vault, one to toss. Let's talk about LXRX. LXRX is a pharmaceuticals company, and this one, do we have upward share price momentum? We do, actually. Now, there's a lot of biopharmaceutical stuff out there, biotherapeutic. I'm going to be perfectly honest with you. This is beyond my area of expertise. If our man Matt Taylor is out there, Matt, we'd love to hear from you on LXRX. If you would like to, we'll put you on the show and talk about LXRX. For me, all I know about it is that it does drug discovery, development, and commercialization. And they have some contracts with some really big drug companies, which is kind of a halo effect for them. There are lots of drug development and discovery companies out there, but they have some pretty big names behind them. Price trend, though, yep, up. Bad share dilution, let's talk about that. So they got a 180-day notice for delisting in January 2025. The way that works is that if you don't do something to get your stock price above $1 a share, you have 180 days, or they will delist you. It's not as hard and fast as that. It's kind of like, the tanking rules in the NBA, where they catch you doing it, but if you can give a good reason, they don't fine you anyway, as long as you just submit the reason. So there's some forgiveness for it there. The 180 days went by. I mean, we could look at the shares here. That's a couple of years, but suffice it to say that what they've done is they approved a stock split for somewhere between 1 for 10 and 1 for 50, but they haven't had to use it. So this is kind of the way they look. Into 2024, $31 million worth of revenue. Into 2025, $49 million worth of revenue. Do have more shares, but we have more revenue per share. This is called being accretive, and we have a lower net loss. That's also accretive to me. that is actually it's not bad share dilution. It is share dilution, but it's not bad share dilution. Here's the problem. I am not an expert in biopharmaceutical companies, so Matt, I'm hoping that you'll contact us and will give us some input on this company. I'll do what I can to do a penny stock spotlight on it, but I'm going to need you. Next, we have SIDU Space. SIDU Space, what do we have in SIDU Space in a price trend? So this is a year of SIDU Space. Over here, we're puttering along, and then kind of almost concurrent with the AI craze of last year and early this year, Space kind of blasted off, if you'll pardon me. That was bad. Kind of took off. The private space race is really something. My understanding is this one's a satellite company. They do a lot of defense work. They have some AI that they incorporate with it. So, do we have an upward price trend? Yeah, kind of. So, let's get into it. What kind of share dilution do we have? All right, December of 2023, they did a 1-for-100 reverse split. At the end of 2024, they had 4,800,000 shares. At the end of 2025, they had 24 million. So yeah, once again, they've gone, and by my eye there, being kind of a math dummy, they quintupled the number of shares again over a time period, and they had, if you'd make that division, that's 96 cents a share of 96 cents of revenue a share in 2024. And only 14 cents of revenue per share after the dilution at the end of 2025, which itself followed the need to have a reverse split and a bigger net loss. To me, that is bad share dilution. I am not going to pursue SIDU anymore. Again, I've seen this stock shilled several times on Penny Stock Millionaires. I'm not going to be able to follow that. Here's what I want to talk about. SmartRent Inc., SMRT. Saw this one on Penny Stock Millionaires and a couple of other spots, I believe, on Reddit as well. What do we have with a price trend for SmartRent? SmartRent, there's a year of it. We have an upward price trend, but then it breaks below that line. We'll talk about that here in just a second. But yeah, enough to look at. So I'm going to go with, we do have an uptrend on SmartRent. Is there bad share dilution? This is a peculiar one. We haven't seen this on any of them that we've looked at so far. In May of 2025, they got a 180-day notice that their stock price had been below $1 for too long and that they needed to get it up, whatever that takes. They then monitored it, and it got back above $1 a share within enough time, with some gyrations, I'm sure. And they haven't done a reverse split. As we've seen with FUBO, it's disruptive. A reverse split doesn't do anything to your equity from a fundamental standpoint, but from a human perception standpoint, it does affect the fact that the price is simply in a different range now. And so from a technical standpoint, it actually can affect it, despite the fact that fundamentally it does nothing to your share value, and shouldn't, but does do quite often do something to your share price. So SmartRent is a real estate technology platform company, property management, that sort of thing. The thing about, we're in kind of the doldrums in a real estate market. We're in I own and run a real estate appraisal and business valuation company. And since the year, I believe it was 2022, that the interest rates went way up from where they had been before. Let's be clear about that. They went a lot higher than they had been before. A shock takes a long time to work through the real estate markets because it's a fairly slow-moving market. compared to other assets, specifically publicly traded assets. And so they are taking losses. And in fact, their net loss is higher now than it was a year ago. But what's interesting is, as we've been going along, they have less revenue, but somehow they've seen fit to buy back 10 million shares. Now, as we said with FUBO, maybe it's a good idea to buy back shares when you're taking losses, and maybe it's not. And we could talk about that a lot, but this really isn't the forum to do it. Suffice it to say that they are showing that they care about the equity tranche. The problem really is that the revenue has dropped off. We do have kind of the upward share momentum, but the stock has kind of sold off a little bit lately. But it seems like a company that isn't going to go away, and I would like to keep an eye on this. So we don't have bad share dilution. In fact, we have anti-dilution, the opposite direction. But we do have less revenue per share. So it's really the growth issue that plagues this company. Again, though, we would have to put this through a penny stock spotlight in order to figure out what exactly we want to do with it. And that is what I think about it. On behalf of all of us at the 10 Mil Club, we would really like to thank you for being here. Laura Sue, our producer and voice of reason, Will, our content manager, Mark Thomas, our head engineer, Sophie, Hannah, and Presley, the 10 Mil singers, and Jackson, our announcer. We will see you next time on
10